Welcome to the Earnings Whispers. I'm Dr. B.
And I'm Benjamin Poole.
And today we're going to be talking about our trades that we took in our service, the Earnings Trader.
That's right. We had some levels that hit in our charts, and then we went live twice. And, well, those didn't go according to plan, but the difference is the levels that we gave out were, they hit, and we tried to maneuver through them, and then ended up playing out at least on one of them later on with some navigating. But we're going to walk you through those and tell you exactly, or show you exactly what kind of happened. And you know, that's part of earnings, right?
Yeah. Well, this is real life, right? I think this is our first week where we've had a losing week in the Earnings Trader. And you know, look, we're trying to be as realistic and transparent as possible, and showing you where we entered, where we took profits, or where we stopped out and took a loss. So that's what we're going to show you today. We took 2 losses this week. There weren't many earnings.
Yep. One was a 50-cent loss.
Yep. Okay.
Per share, and then the one was a little bit bigger.
Maybe a couple dollars. Yep.
Yep.
So a couple dollars per share. So
the fortunate thing is, you know, when we get into these trades, because it's earnings, you can make a lot of money if you go really heavy, but you can also lose a lot of money. So we actually, in our service, recommend going with smaller share sizes to kind of help protect you guys or our traders while we're in there. So
very good. Yeah. All right, let's get to the charts.
I'm going to go ahead and go over the chart. So this is the earnings schedule that we had. So we ended up going live for Oracle. We actually got into Oracle. We held it overnight. We actually had to navigate Oracle, just kept going up. And so throughout the day, I was giving out updates on where the entry levels were. And then it got within 50 cents of our break even. Then we took our half off the table. But then it ended up coming in and actually giving us a profit. Now Oracle is trading much higher. So we did give a couple other levels in here that are not on the board. But the other one that we did, it was Adobe and RH. So we had specific levels for Adobe and RH. And I think Dr. B here is going to go over the Adobe trade with you guys. And then I will go over the Oracle trade and kind of giving you an idea of what happened there.
All right, so we're going to take a look at Oracle stock here. And we can see that this is the daily chart. Now, Ben, what was the first level that we had on Oracle in terms of our first resistance level?
So 149.28.
149.28, right? So right about here.
Correct. And the second one was 150.28.
150.28. And how about the next one?
We actually didn't have a third level for Oracle, and the reason is because the stock was at all-time highs. This is a trade that I would not have given out as far as like just overall levels if we weren't trading this live with our members, right? Just because when stocks are at all-time highs, they can just keep going, like, for example, Oracle did. And so.
And what was the stop loss there, Ben?
Well, we didn't really have a stop loss. We were trying to dollar cost average into the position. But we were still trying to make a profit on it. And so by the end of the day, we were out of the money a decent amount. But then by 7 o'clock in the morning, it actually got down to our break even, at which point we could have taken half off the table. And then right around pretty close to the open, we got back down to our break even. But because the stock was at all-time highs, I actually left it on the table. And then we had to maneuver a little bit more throughout the rest of the trading day with Oracle. So, you know, lesson learned, right? So if it gets back to our break even after we're out of the money significantly, sometimes it's better just to remove it and start over because, you know, as you can see, our average was right around 150, maybe it was 152, but then it shot up higher. So
yeah, so I just want to show here the screen. You know, you can see that Oracle reported earnings right around here, right? And then what happened was we gapped up, and here was the after hours trading levels. And so Ben, what happened? So we added here, so we entered here, added here, and then the following morning, pre-market, what did you do? You dollar cost average through that, and then it came down to.
So here's what happened, right? So our average was right here. This was 7 o'clock in the morning after earnings, and then this was right before the open on earnings during the earnings day. And so here we gapped up. We had our average. We got in probably right here for our, I think it was our third or fourth position. Anyway, it came back down. This was our break even. Again, this is where we didn't take it off. And so I sent out additional alerts as it continued up higher. Almost caught the top. And so then when it came down to, this was our next average right here, right around 155. And that's when we ended up taking a 50-cent loss on our position.
Yeah.
We did end up taking half off the table at our break even. So it allowed us a little bit more maneuverability. But we start with such a small percentage of our portfolio. We said go in with 1/20th of your portfolio. And so I think we got into 6/20ths. So,
Yep.
And we ended up taking half off and we could maneuver again.
Yeah, and just to clarify, so even though we gave these two levels, we traded this live with you, with our members, and even though we gave two levels, we were still able to dollar cost average through the trade as it went against us, and that's what we do, right? Live trading, and that really benefits members to show them why we're taking those shorts, why we're entering at certain levels, and that's the beauty of trading live. So the next stock we looked at was Adobe, right? A little later in the week here, and you can see my chart on Adobe. Here's my resistance levels, my support levels, and this is when earnings came out right here, just yesterday. And really, there was really no movement significant enough to get us in short or long. So in that case, we've stayed away from the trade. Now these levels will still be valid in the future, but in terms of our track record that we'll be posting soon, that really will only be valid for the first 24 hours. So then we moved on to RH, and Ben, just remind me, where was the first resistance level there on RH? And while he's pulling that up, you can see here this, let's just see here, yep. This earnings occurred right here, we gapped up, and I think our first level was somewhere here at gap fill. Let me just show you here.
279.29 was our first entry.
Okay. So 279, just pull that up.
29, yep.
Okay. And where was our next entry?
289.24. And again, this was another one that we ended up trading live with our members. We actually got into, the earnings were supposed to come out at 4:45, so they kind of surprised us with the earnings release. And so we ended up trading this, kind of taking our eyes off, and then we actually got into an Oracle trade as well.
Yes, we did.
And then we had a fire alarm go off in the building, and so we exited that at a break even. But sometimes that's the benefit of trading live is, you catch other movers, you can trade those as well. Mm-hmm. All right, so you had 289 and then 299.63, and then the last one was your stop was 312.18.
Okay, so here you are right here on the screen here. So this was the first entry, this is the second, right? So this is the first add, this is the third entry, and this was the stop. And so our average, so the price went through here, blew right through here, and really didn't pull back. And so our average was somewhere around here. I think I added again around 307. I brought our average up to maybe 296, if I remember correctly, somewhere in this area. And what I did is, just because the volume dropped off, I said, okay guys, why don't we put a stop here, and we'll take a profit, or we'll take our trade off at break even. And I'm glad I did that. We took a loss on the trade. However, look at where the stock rallied to today. It rallied another, I think, $20 from my stop level. So we saved a lot of people pain in that sense. And sometimes that's the way to do it. On a strong stock, you have your stop level in, and over time, probability, if you're doing good technical analysis, over time, yes, you'll take losses on those with those stop losses, but your winners should far exceed your losers. So
yeah, so now we're going to go over a trade that actually worked out. We were not trading this live, so I gave this out on LOV, so it's Love Sacks. Here were the levels on the upside, and I actually noted that this actually favored the upside because of the how far away it was from the on the lows. So we had this big move up. My first level, it actually pulled back slightly, but it wasn't enough. If you notice the move, the target or the ad levels, they were considerably higher. And so it actually got up to our second level before ultimately flushing back in. And this was our take profit. Actually, our take profit was pretty close to right where our first entry was. And so this shows you that our levels are pretty excellent, pretty good overall. Every once in a while, you're going to get a stock that heads up 20% when the implied volatility is 10 to 15%. And that's just kind of the nature of trading, right? And so we try to do our best to minimize the risk, but still give out levels so that way people can trade that. So this would have been a two position entry. So this would have been your first level, second level, and then you would have taken your profits on here. And so over and over again, if we continue to do this, we end up stacking the winners over and over. And then, if we take our small losses here and there, then we take our small losses, but then just keep moving forward, right? And that's the way we're doing it.
That's it. Yeah, action-packed week for us. And we took our licks, but you really have to be. That's just how it is, right? When you're trading, investing, you are going to take your licks. You have to understand how to maneuver through those, be able to kind of move on the next day, focus, get back to it as if nothing happened, and you just keep doing good analysis, and over time, the probabilities will act in your favor.
That's right. So we hope to see you guys on the trading floor with us. We are starting to do more live sessions. This next week is really bare bones. There's not a whole lot going on, so I think we have one live. But as soon as earnings season kicks on, which is in a couple weeks, we're going to start going live again a lot more often. So we hope to see you there.
See you next week. Take care.
Take care.